Hello, welcome to a Tuesday Business News Report. We now focus on the foreign exchange market as food products imported into the country gobbled up as much as $1.24 billion of the foreign exchange supplied by the Central Bank of Nigeria from October last year to March this year, despite the Forex ban directive from the President Muhammad Buhari. The foreign exchange used for the importation of food products into the country more than doubled in the fourth quarter of 2020 as against the previous quarter, during which President Buhari directed the CBN to stop issuing Forex for food and fertilizer imports. According to the Central Bank of Nigeria's data on sectoral utilization for transactions valid for Forex, the Forex used for food imports, however, rose from $121.13 million in September to $198.43 million in October, $204.76 million in November, and then $305.88 million in December. Now, that amount for Forex used for the importation of food into the country surged by 118.6% to $709.07 million in the fourth quarter of last year from $324.37 million in the third quarter. Forex supply for food imports rose from $163.6 million in January to $197.73 million in February, but declined to $171.05 million in the month of March this year. And now joining me live in our Lagos studio to discuss this trend in the foreign exchange market, I have Mukhtar Mohammed, the Chief Executive Officer of Finance. With Mukhtar, good to have you on the breakfast show this morning.
My pleasure always, David.
Now let's start off first with your reaction, having this volume spent on food importation when we have lingering issues around Forex scarcity and we cannot necessarily drive the economy or have the supply to support the economic recovery we're looking out for at this point in time. Does it really make economic sense, although we don't have the base to support agriculture? How do we juxtapose these two realities?
Well, the reality is that we don't even have the capacity to take care of ourselves yet in terms of the volume to meet our local demand. So definitely we still have to depend on importation of this good food product. The main challenge is in the area of assets of Forex, which has been a challenge. If you go through the data from 2015 to 2018, that number kept dropping down in terms of the supply of Forex, in terms of supply Forex in importation of food product. You can see the processes were long because at then Nigeria were more depending, talking about rice importation, which was generally over 90 to 80% of Nigeria. We've been able to achieve sufficiency in that area.
Not sufficiency, but we are
there now. We're gradually getting there. When I mean sufficiency, I mean we can meet our local demand up to like 70 to 60%, which is comparable to about 10% before compared to 90% import. And then Nigerians mostly were more likely to go to the foreign rice, but now most Nigerians are beginning to patronize in the local rice. So that brought down that what you could see that resulted in those dropping down. But now we're looking at household products. We're looking at product like milk and other household product that generally we depend on importation of those products. Now then the CBN came with the ban, and so they have to source for Forex their own self. Now we're just looking in terms of the value before the CBN intervention, but like from your report, after the CBN stopped we saw it drop in March. But now that drop in March, we're going to suffer it in terms of the height in price, because they are not going to stop importing the product. They were not banned, but they have to source it from other sources. So what we are going to see is that we are going to see price of some of these goods that are no more depending on Forex or CBN go high, because they're going to suffer. Anyhow they're going to source for it, they're going to get it, but the price of those goods is going to. And unfortunately, most Nigerian households depend on those goods for survival. So there's always the market available for them. So it's going to be a big challenge in terms of price going up, and yet the average Nigeria or the working class Nigerian means of income is still where it is.
But do you think the federal government or government at state levels or the Economic Advisory Council or the economic drivers of the economy at this point in time understand how critical it is for us to have our agriculture base well grounded in terms of our level of production, processing, and a whole lot more? Because at the end of the day, we have to look at the shocks we've had over time. We are having our external reserves dwindle due to external shocks out there in the international community. We are not necessarily producing as much. Even in January, we didn't produce. So it's about 15 to 19 months thereabout we've not necessarily produced. So we are not having enough of foreign exchange. And the scarcity is continuing. We cannot grapple with this sort of situation for far too long a time. There's a threshold we reach, and then it reaches that breaking point. Do you think the government understands this and why there's need for an aggressive investment in agriculture?
I think the government understands it, but their hands are tied in terms of liquidity. They don't have the liquidity. Like I always say, you use your mainstream of income to develop other streams of income. So if your mainstream of income, which happened to be oil, was suffering until of recent, then you don't have any means to develop other streams of income. When we talk about agriculture, agriculture is capital intensive. So it's not just what anybody can just go into. And again, if you look at the farmers, most of the farmers, the peasant farmers, the smallhouse farmers have not been able to access the kind of money they want, even the agricultural loan.
Well, in creating a blueprint, we have short, medium, and long-term plans. Don't you think that's the sort of agenda we ought to focus more aggressively? The government will say there are interventions like the anchor borrowers and a whole lot more. Lagos State government is calling on investors to come into the agriculture space, but that's not really enough.
You see, it's one thing to come out with the policies, another thing to be able to implement the policies, and another thing to have the resources to implement those policies. It's resources that is the challenge now. It's not that the policy document is bad. Like you say, the short term, the CBN will tell you that we can't continue to intervene with the kind of scarce resources that we have. We need to do something. We need to encourage our own to produce. But what we have seen is that the cost of production in Nigeria is higher than the cost of production in terms of the cost that it takes you to import it. So even those that you are even forcing to produce do not even have the market, because the average Nigerian is still depending on the foreign goods than the local goods. It's going to take time. Now, what they are trying to do is to bring a way whereby you bring in a little bit of scarcity, and then, you know, when you don't have plan option A, you have to go for option B. And so that's what basically will happen. So at a point in time, we'll come to, remember when the ban on the importation of rice stopped, there was in place. Nigeria were not, you don't have rice, so you have to do with the local. So before you start, and then you start taking the local, and you say, this local is not as bad as it is. So I think that's the same strategy they are trying to employ this way. When you don't have this, the liquidity to import this product, then you are forced to depend on those ones that are produced here, even if the price is high. That is the main challenge, but you need it by all means. So you go there, and by the time you start having the market, the era of demand and supply come, and maybe most of these foreign companies, we know the kind of money they make in their product being imported to Nigeria, may be forced to come and set up a plant in Nigeria, and that will now increase the foreign direct investment. So it depends on the angle that they are looking at it. The short-term measure is going to be tough for every Nigerian. The long-term measure is that we might be able to attract foreign direct investment. We might also be able to begin to achieve sufficiency in terms, some level of sufficiency in terms of production of this household product here in Nigeria. I think that's what they are looking at.
And we are waiting with bated breath as well, expecting the figures from the National Bureau of Statistics. It ought to have been out by yesterday. We're still waiting, crossing our fingers to know what happens next. But you made mention of the pressure of having prices skyrocket just because of scarcity. At the end of the day, we also have industries that have to import raw materials. If we don't have that, consumers have to pay much more. Where do you see the next inflation report inching towards? We're at about 18, some are saying 19, but before half year, some are projecting as high as 25%.
Well, unfortunately, the report came in yesterday evening from the Nigerian Bureau of Statistics, a slight decrease in terms of the inflation figures, because it does, the food index price especially, it has gone down to about, in terms of food, it has gone down by 0.05. But when you look at the urban
it's
still high. So we're saying that, when you say 0.005, that's so fragile. And we've not been able to deal with some issues that have to do with insecurity, the banditry. So most of all these farmers are not able to go to farm. So there's still the area of security challenges there. Now, coupled with that, we realize that the CBN have decided to see how they can merge the parallel, the import-export window, all coming together. So it's going to be a very big challenge going forward. So when you look at that, by and by the inflationary figures that you will be seeing in the short term, you expect that it will definitely go up.
Why I say we're still waiting with bated breath is the fact that we're waiting for counter reactions from the likes of budget and much more, because at the end of the day, there are certain notions that the report we are having now is conservative.
Yes.
You share the sentiment?
I do. It's conservative because we are just trying to manage an already bad situation. We are going to see price of electricity go up any time from now. We're going to see price of goods or services are going to go up, because even those that have access to Forex now will not be accessing it. Those that have access to CBN, in terms, like you said, the raw material, they will not be accessing it by what they used to access it a previous week ago, even previous week ago, because they will have to access it at our 410. So that will increase the price in 10. So in going forward, we're going to see those inflation figures come up. We're going to see those figures double. There's no doubt about it.
We're going to wait for all of the reports from our different quarters and also juxtapose that to what we have from the National Bureau of Statistics. All these reactions are valid, because at the end of the day, Nigerians want to know what the real picture is. What does this translate to in terms of the real market value?
It translates to a very hard time for the average Nigerian to be able to meet up this demand.
This morning, Mukhtar Mohammed, it's been a pleasure speaking with you.